Hi guys, welcome to the honeystocks.com weekend analysis for the 16th of November 2019. Now, before I get into this, as always, please just pause the video, make sure you're comfortable with that before going any further. It's basically just saying that there's no investment advice here, this is all opinion and the interpretation of the data is completely on you. So hopefully you get some value from this, hopefully you get some ideas, etc. I know that I've got a growing fan base, so yeah, like I said, hopefully this helps you out a little bit. Before I get into this, most of you already know that I'm registered with the CMT Association. I'm working my way towards my chartered status at the moment, so technical analysis is what I'm widely known for. So the charts that I'm going to be going over at the moment are very technically based. So for you fundamental guys out there, it's probably not going to be for you unless you're using a bit of technical analysis in your decision making. I think the one thing that I also understand is that there's many of you out there that are stepping in the brown stuff at the moment despite an advancing market. So if you do get value from this, please just subscribe to our channel. I think there should be in the bottom right hand corner a little subscribe button, and you're more than welcome to follow along with our work. And again, most of you will already know this, but there was a big announcement a couple of weeks ago. We've just introduced our annual membership to our premium charting research. Now, it's very, very clear, even early on, that I've had to limit the numbers to 100 members. So this will be for those of you that are looking to be a bit more serious about your trading. I can't make you a better day trader. I'm not a day trader myself. My time horizon is generally weeks to months. I would categorize myself very much as a trend following swing trader. So again, feel free to check out our website, but let's just dive into the charts. I mean, that's why you're really all here, isn't it? So first up, I really want to just talk about here is the Dow Jones Industrial Average. Now, very, very clear, we've broken out. Now, this is not a bearish move for the market in any way, shape or form. This is very much bullish. If it looks like a bull, walks and talks like a bull, it's bullish. And that's what the Dow Jones is really telling us at the moment. Same story, I think, with the S&P 500. The one thing I did want to kind of touch on here, though, is we still have a declining percentage of stocks that are trading above their 50 simple moving average. Now, that in of itself is not a massive concern. However, I think we must always ask ourselves, what if we're wrong? Now, the best thing to do in any market is to just analyze the other side of the equation and start to kind of think about, okay, we understand we're in a bull market. We understand the stock market is advancing. We should, in theory, be making lots of money. But what would be the set of circumstances that we would need to observe if the market fails on us and we start to deal with rapid declines? So this is one of those areas that I like to keep an eye on. It's the percentage of stocks that are trading above their 50 moving average. But as we can see, even on the daily chart with the S&P 500, again, we're breaking out above key resistance. So that's absolutely a bullish move at the market. We have had 6 weeks now of advancement. Common sense tells us that the stock market does not go up forever. So there is an expectation that we should see a little bit of a pullback. Now, the reason I say that is if you look to recent history, anytime the market has reached overbought conditions, we can see what's happened. We've had these declines. Now, this is why this is quite interesting to me at the moment, again, with the percentage of stocks. We've reached overbought conditions. So are we going to see a big decline here, or are we just going to blast through this resistance and then start to make its way towards 3,200? So that's the big question of the day at the moment. And I think until price tells me differently, absolutely, we've got to be bullish on the market. So the charts that I'm going to walk through with you are the charts that have been most requested this week. I'm also going to walk you through a couple of charts that I've sent trade alerts to our premium members. And the first one that I want to just kind of touch on is Nike. Our premium members got an alert for this earlier in the week. And as we can see, we're off and running with this one. Very clear, logical upside target. This was the thesis that I presented. And Nike, I think, ultimately starts to move towards $100. So if that's not on your radar, or maybe you're already in the stock, obviously we hope that it blasts through $100 and keeps on going. But I think $100 would be a logical upside initial target, and then we just reevaluate our thesis from there. The optimal entry, I would have to say, in my opinion, has been missed. I don't think this is one that you might want to jump on top of straight away. I think if you can get a little bit of a pullback, then that might offer opportunity. But this was one that was sent to our premium members earlier in the week. Match.com. Again, I've been getting a lot of requests about this one because I think a lot of you are simply concerned that it's not recovered. We obviously had a huge decline, I think, on the back of earnings. And I've touched on this one a couple of weeks ago, I think. And I think the message is, at the moment, it's not a place that I want to be buying the stock, technically. I think for that to happen, I think we would have to break above key resistance levels. So this is a level that I feel like with Match.com, or Match Group, I should say, that is the area that you probably want to be observing. Very, very similar to PayPal, obviously great company. It looks like we're in a bit of a descending triangle pattern. Now, it's anybody's guess. Do we break up or do we break down? I think given the fact that it's obviously PayPal, I think we could probably hedge our bets and say that it will eventually break out to the upside. But is it going to break out next week, or is it going to keep filtering into this narrow alleyway? You don't want to be holding stocks for a month or two and having your money doing nothing for you. And that's where technical analysis comes in. So I think if you're out there and you're looking to buy PayPal, I think this would be a level to build into your chart and just observe on a weekly basis. Zscaler, I presented a thesis a few weeks ago just saying, have we found the bottom in Zscaler? That has been playing out thus far. Although I have to say we are approaching this 50-day simple moving average. Now, I think if we can get a break above the 50-day simple moving average, I think that does remove a significant hurdle or a barrier for price. So I will be a bit more bullish if we can break above that level, and naturally we want to see the moving averages sloping up. But at the moment, it does seem like we've kind of got a bit of a support base here to work from. So hopefully Zscaler can start to demonstrate a bit more strength. Last week I presented a chart for Amazon, and again, we are in this triangle pattern at the moment. You know, are we in a descending triangle, symmetrical pattern? Technical analysis can be very subjective at times. There's not any right or wrong answer. It's just reacting to what price tells us, and we obviously use technical analysis to facilitate better investment decisions. And certainly with Amazon at the moment, if the market's going to advance, I don't really see Amazon being left behind. I would expect a break to the upside. However, going back to what I was saying at the start, we always need to ask ourselves, what if we're wrong? And I think for me, I think if Amazon breaks below these key structural levels, then that would be a problem for me. And that might be an area where you might want to consider getting a little bit defensive. Now, Shopify was asked about this week by a number of you. Now, I think with Shopify, we've been very, very clear. Around 6 weeks ago, I highlighted this as a problem, that we were rejecting the 50-day simple moving average. Now, as we can see it, and this could absolutely correct itself next week. I'm not saying that, I'm bearish Shopify or anything like that, but what this demonstrates to us, those are characteristics of downtrends. When we start to see rejections at key technical levels and we see price falling away, that's more of a sign of a downtrend. That's not really an uptrend. I think at the very least, we can absolutely say at the moment that Shopify is chopping sideways. It's potentially in a bit of a triangle descending pattern, and where it goes from here, nobody knows. However, I think this is the area that those of you that are maybe in Shopify, maybe those of you that are looking to take puts, bet against Shopify, I think this is the area to do that. Likewise, if you're looking to buy Shopify, we can clearly see that we've got a clear support level in place here. But for me, I think a break above this level would make a lot more sense. That's just logical to me. Southern Company is a stock that is chopping sideways at the moment. Obviously, very clear uptrend. It's been in an uptrend for the last 12 months. But at the moment, it is just consolidating. It's chopping about in a sideways range by the looks of it. So I think for Southern Company to be interesting, I think we need to get a break to the upside. And absolutely, the danger levels, you need to be cautious below the $60. I think maybe around $59 might be a point where I would just say, do you know what, thanks very much, Southern Company, on to the next one, because most of you already know by now that it's very much a case of dating. We're never marrying, and that's how I see Southern Company at the moment. Canada Goose I highlighted last week and just said, look, if charts had identical twins, then this would be these would be the twins. We can very clearly see that this has replicated itself. I think maybe one or two of you reached out to say thanks because you had puts on this one after an analysis a couple of weeks ago, and naturally, I hope those are very, very profitable and continue to be profitable. However, I think this is now the level to kind of keep an eye on. There's an argument where that's the level or that's the level. So I would just be keeping an eye on those and, just evaluating your position on a daily basis. I didn't really look into the earnings with Canada Goose. I just seen that the key support level broken. So at that point, you obviously just become bearish on the stock. TH. Now, this is a stock where one of my clients in the last month or so has taken, I think it was $80,000 or $90,000 from this one position, and it's very much a case of waiting to see what happens above $82. We can clearly see that when we look left on the chart, that there is historic resistance there. So I think if we can get a break above that, that might be the catalyst for new money to come into the stock. And quite clearly, there's an upside objective there, which I've not measured it out actually. So you've got an upside objective there of about 35-36%. And that's reasonably healthy. Time horizon for it to reach that level might be a month or two, but ultimately, when you understand trend following strategy, and obviously the benefits and the rewards and the returns, the profits, etc., that's well worth holding on to for a couple of months for those types of returns, especially if you are competent with options. Beyond Meat, again, I'm not really seeing much sign of positivity, I think would be the word there. Now, we've obviously had a breakdown, and this is something that, obviously, with it being a new recent IPO, there's not a lot of structure to price. So I think what we just have to understand at the moment is until we start to kind of get a bit more data, a bit more information, the company, it's not one that I would be massively on board with. I think if you've tasted the product, it's not, in my opinion, particularly great. Maybe the vegan movement loves it, but for me, it's not for me. So therefore, the company as a whole, I'm just not buying it, to be perfectly honest with you. And technically on the chart, it's a very bearish chart. Yes, I accept that we are looking like it's starting to find a bit of support there, but ultimately price is still moving down. The bounce that we've kind of had over the last week is, there's not a lot of conviction with that move. We were massively oversold on the stock on a technical level, so we've got a little bit of a bounce, but for me there's not a lot of conviction in that move. So I think if you're out there and you're bearish on Beyond Meat, I think you can continue to be bearish. Disney has been interesting this week. I think most of us were expecting a bigger move. Now, what's ultimately happened is we've obviously got historic resistance, and at the moment this historic resistance is still holding firm. Yes, I accept that we've had a little bit of a spike above resistance, but until we get conviction with this move, I think a lot of us are hoping for this to start to move towards 180. Certainly within the technical analysis realm. I think those of us that understand technical analysis understand price targets and things of that nature. But for me to be convinced that this is going to move towards 180, we have to have conviction in a close above this level. It's not happened yet. Do we get it next week? Will it offer opportunity next week? I think it's absolutely one that you might want to kind of add to your radar. Now, AMD is super interesting at the moment. I've been getting a lot of questions about this one, and absolutely it's one that some of our premium members are doing very, very well on. However, I think to go in and jump on the back of this move at the moment doesn't make a lot of sense. The RSI is massively overbought. You don't really want to go taking in new positions when RSI is as high as 82. That doesn't make a lot of sense to me. So I think for those of you that are maybe looking to get in on AMD, I think there's a pullback coming shortly. Will it happen at 38? Will it happen at the round number 40? Let's figure that one out. But I think the message for me is I wouldn't be jumping on the back of this one at the moment. I think the technical side of things, if you can get the optimal entry into the market, or an entry that causes a lot less stress, maybe you're fundamental in your approach, and maybe you like a company, you keep buying a company, but for whatever reason you have to deal with a month or two of being sitting in negative equity. I think that's where technical analysis really comes in and helps. Most of our clients and premium members actually have a strong fundamental background, and just by adding that technical game, it can massively impact your decision making and just make better investment decisions also. We also have Comcast. Now, Comcast at the moment is currently trading in a bit of a sideways range at the moment. I think for me, I'm still bullish on Comcast. I think above this trend line and above this support level, around $43, $44, I think we can still be bullish on Comcast. I think the problem would probably occur if we're starting to come into this area down here. I think that would create a bit of a hurdle, mental hurdle, etc. I'm not looking to hold on to stocks blindly and hope. I'm quite happy to just cut positions as soon as they break down technically, and again, that just makes logical sense. Netflix, I know that there's many of you out there that are holding that have maybe bought in a bit high on this one. I think we just have to accept that with Netflix, it's in a sideways triangle pattern. It's absolutely going to break out one way or the other. It might offer opportunity if we can get further strength to the upside. I suspect that this will probably just start to filter through this level before it ultimately springs. That's what happens with triangle patterns. So for those of you that are out there in Netflix, this is a weekly chart as well, I should say. So there is a potential here that you could be holding this for quite some time. But like I said, I have to call it as I see it. I'm not here to present any wild technical theories. This is all logical stuff. So yeah, if you're out there in Netflix, I absolutely hope that it turns around for you. I know certainly from the messages and the emails that I receive on this stock that there's a few of you that are in a bit of distress with it, and I don't like to see that with anybody. So hopefully that one can turn around for you. Activision Blizzard is in a bit of a sideways pattern at the moment, where we're chopping about sideways between Fibonacci levels. I think if you can get a break above the 38.2 level, which is around 57.50, I think that would be an area that you might want to consider. It's only a few bucks away. So I think if you were to set a price alert and then reevaluate Activision Blizzard at that point, then that might be an area where you might want to consider in future. Now, Micron Technology is looking interesting again. Again, we're only a few dollars away, but I think if we can get a conviction move, we can clearly see that the Fibonacci levels are respected with this one. So I think if we can get a move above $50, I think that would be a buy signal for this particular stock. And I think if we can get above that Fibonacci level, there's obviously a good amount of upside there, around 27%. So that's an area where I think you should maybe do a little bit more due diligence. Cisco earnings weren't great. They weren't blowout earnings. Now, the problem that we have with that, and it's not that it's turned into a bad company, it's obviously a decent company. However, again, on a technical level, when we see these clear structural levels start to break, it's logical that price starts to make its way towards the next level. So if you're out there and you are perhaps bearish on Cisco, I think this is a logical kind of target area to aim for. At which point, if we get a failed breakdown and we start to see an advance, then that thesis would absolutely be incorrect, and you might want to consider reevaluating your thesis and your position. But I think at the moment, I think Cisco Systems, it's not a place where I would want to be buying the stock. Technically, again, fundamentally, you can do what you like, but for me, very heavily technically focused. It's not a stock that I find massively appealing at the moment. And we also have right now Alibaba. I think Alibaba is one that I get asked about routinely. I have done over the last 18 months. I think that this is really what triangle patterns do. And those of you that are out there in Netflix could probably pay attention to this one, because those that have been in Alibaba, this has been a long slog. If you think about where your money could have been invested, for example, and you could have been compounding on other positions, for example, and this is just where my approach comes in. But I think if you get a breakout above this level, that would certainly be a bullish move for the market, and that would be more than likely, I think, a bit of a catalyst for new money to come in, and hopefully Alibaba, China, etc., they recover. Because I know there's a lot of us that did very well on the Chinese tech stocks a couple of years ago, and I'd kind of like to get back to some of those beaten down discounts. But for that to happen, we want to see the biggest players in this space start to advance. So, like I said before, if you've enjoyed that, please do subscribe to our channel in the bottom right hand corner there. Also, the link in the description also has a direct link. So if you want to register your details and you want to consider joining our premium annual membership, then you can register your details there. So like I said before, it's not for those of you that are wanting to get better at day trading. It's really for those of you that are serious about your investing, those of you that are serious and want to have educated discussion with educated people. And it's not a day trading chat room. It's nothing like that. So feel free to kind of check that out. And if you don't know who I am, maybe this is the first time that you've come across my work. I'm Sam, and like I said before, I'm registered with the CMT Association and working my way towards chartered status at the moment. I also run honeystocks.com website, and feel free to go and check that out. There's a lot of free information on that website. Very, very open about what it is that I do. I'm very open about my style. I'm very open about the charts that I send to my premium members and my clients. And like I said before, these are typically the types of individuals that really want to attach themselves to what I do. I think if you're trying to fit trading around maybe a career or a business, maybe you want to move away from day trading, maybe you just want better consistency and you want educated premium charting, those are the types of individuals that I can help. A lot of our clients and members are very successful traders and individuals, business people in their own rights. And, like I said, it's a very intellectual, educated bunch. And just to go back to what I said a second ago, going back to the day that I set up the website 2 years ago, I have logged every single chart that I have posted to my clients and premium members for complete transparency, so that anybody that's maybe thinking about coming in, you can see the types of charts that I'm posting. There has been obviously a few more charts since the Goldman Sachs there, but certainly those are the types of stocks. Now, I'm not saying to you that you can come in and make 700% in a year. It's highly, highly unlikely unless you're a very successful options trader. But what it should hopefully do is just give you an idea of the types of charts. You won't be able to move in on every single stock or position, but I think you can check them out and see if that fits the bill for you. I know that it's worth a lot of money. Now, if you're out there, like I said, you're maybe learning from losses, maybe you're learning from YouTube, just ask yourself if you want to keep doing it the way you're currently doing it, or maybe you're open to maybe learning a new way, then again, feel free to register your details below or jump onto our website. We've got various options for you if you want to learn and not just follow them. We have options for you guys as well. So from the bottom of my heart, thank you very, very much for watching, and maybe we'll see you in the next video, or maybe we'll speak to you soon. Thank you very much.